Hello everyone, today is March 20th, 2013. Tomorrow's the first day of spring. So, you're never going to believe what I saw today. For some reason, the last few times that the Federal Reserve has had their meeting, Ben hops in his helicopter and flies on over to the West Coast to start his drops, I guess, and then work his way back home. But I'll give you a quick recap of the last couple meetings, what happened, and then I'll show you what I saw today. Wait, is that him there? Wait, where is he at? I hear him. Well, I don't see him right now, but he's going to continuously come. This is not just one helicopter drop. He's going to keep coming. Just keep your eyes peeled. You're going to see him. He's going to be coming around in his helicopter over and over and over. Hey, what's that noise? What is that? It's getting louder. Don't see anything over there. What is that noise? Well, here's Chase. Oh, wait. This Chase Bank. Where's he at? It must be Bernanke. Man, it didn't take him long. Jeez, here's Wells Fargo. Wells Fargo, Chase. Man, Bernanke's just swooping right in. He's not taking long at all. So anyhow, the Fed says that they're going to continue to print $85 billion a month. Those weren't the words used by Mr. Bernanke because they're not actually printed. They're just created on the computer. But in effect, he's creating $85 billion a month, which has contributed to driving up the stock market to all-time highs. And some people think that that's an indicator of the economy getting stronger. The Dow Jones is, at an all-time high, and people are out there spending more money. I heard Bernanke mention. So retail sales are up and the economy's recovering, but we're still at 7.7 unemployment. He's looking for 6.5. So things are getting better, but they're not quite good enough yet. So we're just going to keep our foot on the pedal, and as long as we don't get over 2.5% inflation rate, so basically as long as we don't steal more than 2.5% of your wealth on an annual basis, then we're within our target range. I'm, as the chairman of the Federal Reserve, I'm able to stick my hand in your safety deposit box and help myself 2.5% a year. That's what we do here, keeping the U.S. dollar on firm ground. You can go to our website and you can see that maintaining a stable dollar is one of our main objectives here at the Fed. And on our 100th anniversary, we've happily driven that value of that dollar down 98% over the last 100 years. So anyhow, enough of that. Oh, and by the way, Ben Bernanke was asked about the situation, said that, not much effect on the U.S. now. And he was also asked if it was possible for Americans to be requested or asked upon to take haircuts, to help bail out the banks that they're creditors of because they have deposits there. And he said extremely unlikely. And I put a lot of belief in those words. Ever since, I think it was 2005, and Mr. Bernanke had the following to say about a possible bubble being formed in the housing market. I always put a lot of confidence in what he says. You can hear that here. I'll leave you with this here. I'm sure you'll feel real confident after hearing what he said about a potential housing bubble in the U.S. Just a year or two before we had a, total market meltdown in housing. So I'll talk to you all soon, and I'll leave you with that here.
Tell me, what is the worst case scenario? So we have so many economists coming on our air and saying, oh, this is a bubble and it's going to burst and this is going to be a real issue for the economy. Some say it could even cause a recession at some point. What is the worst case scenario if, in fact, we were to see prices come down substantially across the country?
Well, I guess I don't buy your premise. It's a pretty unlikely possibility. We've never had a decline in house prices on a nationwide basis. So what I think is more likely is that house prices will slow, maybe stabilize, might slow consumption spending a bit. I don't think it's going to drive the economy too far from its full employment path, though.
So would you agree with Alan Greenspan's comments recently that we've got some areas of the country that are seeing froth, not necessarily a national situation, but certainly froth in some areas?
You can see some types of speculation, investors turning over condos quickly. So those sorts of things you see in some local areas. I'm hopeful that, and I'm confident, in fact, that the bank regulators will pay close attention to the kinds of loans that are being made, making sure that underwriting is done right. But I do think that this is mostly a localized problem and not something that's going to affect the national economy.